Welcome to Reverse Mortgage Radio, hosted by Legend's very own reverse mortgage professor, Bruce Simmons. You have so many options with a reverse mortgage, everyone has a different opinion, and the government keeps changing the rules. You need to hear from the first certified reverse mortgage professional in Colorado to specialize exclusively in reverse mortgages, one of few in the state with the letter CRMP after his name. Bruce has the specific training and education you need to understand what you're buying. Now, here's your host, Bruce Simmons.
Hello, and today on Reverse Mortgage Radio, we're going to be talking about a couple of ways that a reverse mortgage might be able to help people out. We're going to be talking about debt, and specifically debt for older homeowners and the impacts of inflation. That'll be an interesting conversation we're going to have, but we're also going to be talking about something a growing number of homeowners are doing to get some extra dollars flowing. And it's probably not what you think, being that this is Reverse Mortgage Radio and all. But make sure you stick around here in the future because we are going to be talking about that in detail. However, before we get there, I do want to introduce myself. My name is Bruce Simmons. I'm the Reverse Mortgage Manager with American Liberty Mortgage here in Denver. I've been with American Liberty Mortgage now since 2011, and I've been specializing exclusively in reverse mortgages since 2003. My direct line, if you have any questions about reverse mortgages, is 303-467-7821. 303-467-7821 is my direct line. That number rings to me I actually have an office in my home. It's a landline. That number is a landline. Don't text me there. But I have it forwarded to my cell phone because I'm not in my office in my house very often at all. It's just I've had that phone number since 1999. So I like to keep that number going, even though it's a landline. I still pay a lot of money for it, and I like if you use it. Call me with any questions about reverse mortgage, about your specific situation. I'll answer whatever questions you have about the program. I can find out a little bit of detail about your specific situation and work up some numbers or let you know if we can help you or not. It doesn't cost anything. I'm not going to sell your information or stick you on some list or anything like that. Just give me a call. I'd love to talk with you. You can also, though, visit me online at reversemortgageradio.net, reversemortgageradio.net. And I'm in the process of getting a reverse mortgage calculator on my website. So you can go there and get a quote yourself. Now, hopefully it'll be up next week. I thought it was going to be up last week. Technical issues delayed that process. I'm hoping on Monday we can get this fixed and get it on my website right away. But basically what it'll do is it'll allow you to run numbers and where you actually see the numbers without having to wait for me to call you back. Okay, because a lot of those websites, they say they have a calculator, you fill out all the information and you hit send and then boom. Oh, we'll have somebody call you back or somebody will be in contact with you with the numbers. And then they sell your information to 14 different places. My calculator does not require social security number. Don't ever, when you're shopping around, don't ever give your name or your number, your social security number, that is, on any website or to anybody if you're just getting quotes. This is just a little piece of quick advice. There are some lenders that require you to give your social security number in order to give you a quote. Well, they don't need your number to give you a quote. They can ask you if you have good credit or not. Most people know, yes, I've got 800 plus credit score, or other people say, well, I've had some trouble in the past and this is it. I don't know what it's going to say now. But that can be factored in once you decide who you're going to go with. So make sure you don't give your social security number out when you're just shopping around. In fact, I'm doing a loan for some people. We're closing next week. And the first lender they talked to, they didn't even know this guy pulled their credit bureau, their credit report. And it showed up as an inquiry when I pulled their credit report, and I asked them if it was okay if I could pull their credit report. And they were like, okay, yeah, we're going to go with you, so let's do it. And then I said, wait a minute, this company pulled credit report. Is this the company you were talking to? Oh, yeah, that was them. So keep in mind, you do not need to give your social security number out, and you should not give your social security number out to anybody when you're just shopping around. So hopefully, check back on my website here in the next, probably by the end of next week, the end of this week, I should say, somewhere around, what is that, the 15th or so, 14th, 15th, 16th of the month. And there'll be a button down on the homepage and in other places as well on the website about click here for a free quote or something like that. So anyways, I kind of lost track, but you can visit my website, and also you can download my consumer guide. I've got a free reverse mortgage consumer guide on my site. You can download that information. That's working. It's been working for years, and you can learn all about reverse mortgages that way as well. reversemortgageradio.net is my website. Now, before we dig into the meat of what we're going to be talking about today that I teased earlier in the show, I always like to give a brief overview of what a reverse mortgage is. Essentially, most of the time, it is an FHA insured loan. FHA stands for Federal Housing Administration. So they insure the loan. The loans are from private companies, but the Federal Housing Administration insures the loan. So that guarantees the lender is going to get their money, and it also guarantees that money that we say is going to be available to you will be available no matter what happens to the lender. If the lender goes out of business or something, FHA steps in and they say, okay, yes, you're receiving $1,000 a month, or you've got this $100,000 in a line of credit. That is still available to you, even though this company went out of business or were hit by a hurricane or a tornado or something like that, which hopefully doesn't happen, but it has in the past. So keep that in mind. It's an FHA insured loan that's specifically designed for people that are 62 and over. It allows you to convert a portion of the value of your home into money that you can use. Now, a lot of people confuse value with equity. Equity is the difference between the value of your home and the amount owed on the home. I'm telling you, we base the amount we can loan on the value. If you've got an $800,000 home, we're going to base the amount we can loan on that $800,000. And then from that, we have to pay off any existing mortgage. So let's say you call me, you say, hey, I've got $400,000 in equity and I want to borrow against it. Well, maybe you need a home equity loan, but it depends on your situation as to whether or not a reverse mortgage will work for you, because we have to pay off any existing mortgage on your home. And in order for you to get 50% of the value of your home, given the way interest rates are today, you need to be close to about 85 years old in order to get half of the value on a reverse mortgage. So if you have an $800,000 home and you owe $400,000 against it, you've got $400,000 in equity. But if you're only 62, I might only be able to loan you about 32% of the value of your home. And what is that? Roughly, I don't know, $220,000, $250,000 on $800,000. But you owe $400,000, and I might only be able to loan you $250,000 or $280,000, whatever the number is. I should have done the math beforehand. But basically, in that situation, I cannot help you because we cannot loan you enough to pay off the existing mortgage on the home. You can still do the loan if you came in with the difference. So let's say you cashed out an IRA or something and you brought that money to closing, and if I could loan you $250,000 and you bring $150,000 yourself and you drop it down on that loan balance to lower your balance to $250,000, and then we use the reverse mortgage to pay off the loan completely, well, now you have no mortgage payment. You say, well, why would I drop $150,000 out of my savings to do that? Well, if your principal and interest payment on that, let's say you just refinanced in 2022 before the rates really started jacking up. So let's say 2 years ago, and you financed it on a 15-year loan. So your mortgage payments, say $2,500 or $3,000 principal and interest a month, even though you've got a 2.5 or 2.75 or 3% rate, the payment is just chewing away, and you know you're you're 65 years old and you're going to be paying on it till you're 80, you say, hey, I'd rather not drop $3,000 or $3,500 a month on this. So it's better to take this money out and put it down. And everybody's individual. So we would crunch the numbers to see if it makes sense for you. But that's a scenario where you've got a lot of equity, but maybe we cannot help you at this time. There's never a no for reverse mortgage. Okay, let me tell you that. I never say no to reverse mortgage. No now, possibly. Right now, I can't help you. But that does not mean that I can't help you next year or 2 or 3 years down the road. I've done loans for people 6 years after I initially talked to them because they had situations, either it didn't work out or they weren't ready to do it at the time, but we stayed in touch and they kept calling me with updates. Where are we at now? The value's gone up or whatever the case may be. I mean, I'm doing a loan right now for a guy I spoke to over a year ago. And he called me back earlier this month or in July and said, yeah, hey, I'm ready to do this now. Let's get it going. And so we are. Anyways, it's a reverse mortgage is a loan that's designed for people that are 62 and over that allows you to convert a portion of the value of your home into money that you can spend. As long as you live in that home, you never have to repay this loan. There's no mortgage payment required. However, the house is still yours, so you do have to continue to pay the property taxes and the insurance. You have to maintain the home. You have to live there as your primary residence, and you have to keep your name on title. As long as you do those 5 things, no payment is ever required. You can make payments on this loan, and some people do. And there's benefits to it that I'm not going to get into here because we just don't have time today. But it allows you the peace of mind of not having to pay the principal and interest payment. But you're still charged interest every month, actually interest and mortgage insurance every month. Well, what happens to that money you're charged? It gets added to the loan balance. This is a 100% negative amortized loan. Okay? What that means is your loan balance gets bigger and bigger and bigger. Every month you get a statement in the mail, or you look at it online, and you're going to see your loan balance growing, getting larger and larger and larger, and it's compounding too. So keep that in mind. 10 years from now, if you take out $200,000 today, you might owe $350,000 or $400,000 10 years from now, or 15 years from now, depending on interest rates and things of that nature. So all that you have to be okay with. I always tell everybody, if looking at that statement and seeing that balance rise over time is going to cause you more stress than the benefits of not having that mortgage payment or the benefits of having that line of credit or that monthly revenue stream coming into you, if looking at that statement causes more stress than the benefits you get from the reverse mortgage, do not do it. Don't do it. I've had people, just like I was talking about before, they say, right now, I can't do it. It's just, I don't like that idea of that negative amortization. But then a year later, 2 years later, they call me back, say, you know what, I've thought about it, I've crunched the numbers, and it makes sense now for me. And it's different for everybody. Some people it works for, some people it doesn't. Some people it doesn't work for now, and then it does later. And it better not be the other way around, where, yeah, it works great now, but then later you notice it and it doesn't. Because, knock on wood, in 21 years of doing reverse mortgages, I've never had a customer or a family member even call me back and tell me they regretted it. And I do not want you to be the first. So I'm very, very clear about how that loan balance will grow over time. All right. Remember, you are listening to Reverse Mortgage Radio. My name is Bruce Simmons. If you have any questions about reverse mortgages, please feel free to give me a call, 303-467-7821. That's my direct line, 303-467-7821, or visit me online at reversemortgageradio.net, reversemortgageradio.net. You can download my consumer guide there and all that stuff too. First thing we're going to talk about is the debt. And debt, combined with inflation, Yeah, that's not a pretty picture for somebody on a fixed income. A lot of times you say, well, inflation can help people who are in debt because in the future, the dollar's worth less, so you're paying back this money that you borrowed with cheaper dollars. Okay, so the dollar isn't worth as much, but you're still paying that dollar back. But the problem is people who have credit card debt at 20% plus, you're never paying that back. You're paying it back, but you're not paying it down. You're making the minimum payment. And that's not the way to work, to use credit. It's not a good idea to do it that way. So now we're going to talk about a couple of things. First of all, let's talk about the inflation, okay? I talked about this, I think, a week or two ago, but I think it bears repeating because inflation affects us all, and it most negatively affects people on fixed income. In other words, retirees, okay? People who are counting on that Social Security. So there was a study recently by, the Senior Citizen League that showed how Social Security benefits have lost 20% of their purchasing power over the last 15 years, since 2010. The cost of living adjustments just are not keeping up. The underlying cost of living adjustment is lagging behind inflation, and it has lagged behind in 8 of the last 15 years. Okay? And it's the cumulative effects of insufficient adjustments and higher than normal inflation that have pushed a lot of retirees into financial insecurity. And especially when you've got other debt and then all these expenses keep going up, you've seen the headlines and you know whether or not it's affecting you or not. And it doesn't affect people who have a lot of money as bad as it does other people. Who don't have as much money. Other people who have a lot of money, well, they've got assets, hard assets usually, so they're benefiting from the inflation. They're benefiting from higher interest rates because they've got money in savings, or they've got money in real estate or precious metals, whatever. And so even though inflation has come down, it's still growing. That's the thing that kills me. When you see the news, they say, oh yeah, inflation's dropping. No, it's not. It's just not growing as fast. 3% is not growing as fast as 8 or 9% like it was last year. But if inflation stayed at 3% this year, that means you've lost 3% of your purchasing power. Keep that in mind. Don't listen to the way they project things. The other thing is the levels of debt have gotten a lot higher over the years too. A recent survey, or actually it's called an issue brief, by the Employee Benefits Research Institute, or EBRI. So more households led by older Americans are either who are either in or near retirement are carrying higher levels of debt. And this has major implications for nation's retirement readiness posture, is what they say. While improving in many areas, they say, in most recent years, the overall trend in debts are troubling in terms of retirement preparedness, that American families just reaching retirement or newly retired are more likely to have debt and higher levels of debt than past generations, specifically those who were reaching or in retirement in the 90s. Okay, so they're comparing like people who are entering in retirement now to people who entered retirement in the 90s. They say one of the biggest culprits is credit card debt. The overall percentage of families headed by someone age 75 and older who carry credit card debt has reached its highest level since the early 90s. This is keeping financial issues top of mind for people throughout retirement when the likelihood remains much higher that these people will be living on fixed income. Okay, so this is kind of how it says. And then it says, the purpose of the brief was designed to focus on an element of retirement savings that is not as often discussed as the accumulation phase of savings. A lot of people talk about retirement and planning for retirement and savings and accumulating, but namely the impact of debt on the ability to sustain retirement. You say, okay, well, I'm going to be making $3,000, $4,000, $5,000 a month in retirement, and that's great, but inflation is going to wear that down depending on when you start receiving that. And also, if you're carrying $20,000, $30,000, $40,000 in credit card debt, that's going to impact that. So that money that you're saving is not going to go as far because you have to pay this debt. And that's the killer. Now, what I want to mention that I kind of teased too is how a lot of people are dealing with this. Okay. There was a podcast on a Boston radio station recently that took stock of the phenomenon of older Americans cohabitating with younger roommates. Okay. This is what I'm talking about. So you get somebody that you're not related to that may be younger than you to help you out because of the housing situation and things like that. And I saw this in a newsletter that I get every day on mortgage information, specifically reverse mortgage, called Housing Wire. And I focus on the reverse mortgage daily part of that publication. But they put it out every day. And this was an article by Chris Clow. He's a very good writer of reverse mortgage issues. A super nice guy. I've met him. He's interviewed me for different articles as well. But they talk about it here. They say, older Americans who seek out younger roommates to stay on top of high housing costs is not a new concept, but there is evidence to suggest that the trend is growing more popular. And this is according to a recent podcast hosted by a Boston-based NPR affiliate. And that affiliate is WBUR. And NPR is National Public Radio. Jennifer Malinsky, director of the Housing and Aging Society program at Harvard University's Joint Center for Housing Studies. Whew. Say that twice and fast and see how it comes out. But she described how the idea of baby boomers seeking out roommates could be gaining favor among the older populace that is challenged to make ends meet with housing while living on a fixed income. And you combine other debt to that and it just compounds it. But she says, among older adults, it's just under 1 million people are living with unrelated other folks, that's a quote, and without any other family. She said, and it's under 2% of the older population. About half of those people are living with older adults and 38% of older adults who are living with younger people, and the rest are some more complicated relationships, is how it says. She says the numbers have grown. That's doubled since 2006 as the older population has grown, and it's edging up in the percentile as well. I think for a number of reasons. Housing costs are rising all across age and income spectrums. Frankly, moving up to middle income folks having a harder time paying for housing. The older population is growing. We've got the leading edge of baby boomers on the cusp of turning 80 now. And also, too, by housing costs, think taxes and insurance. Even if you have no mortgage payment, it's expensive to have a house. She said, too, we all know that the population's aging more quickly, and the over 80 population is expected to double in the next 20 years. She said here, though, we're recognizing both the dangers of social isolation and also the need for older adults, especially when they reach their late 70s and 80s and beyond, to have some more help around the house. So I think it's these reasons combining to make this model more particularly attractive. She said of the 56 million older U.S. adults, roughly 15 million people live alone. Many of these people are also mismatched to their homes, meaning that the homes are far larger than they need and they're unable to properly maintain them. Now, this brings up an issue of reverse for purchase. Did you know that you could sell your house, use the money from the sale of that house as a down payment, and then get a reverse mortgage for the balance? So you can get into a newer house that fits your needs and still have no mortgage payment. It depends, of course, on your age and the value of the home you're looking at, the amount of equity you have in your current home, all those factors. Feel free to call me with any questions. I'd love to talk with you about your situation. And I know a lot of good real estate agents, very good real estate agents, depending on where you're living, that I can put you in touch with that can help you out. Because a reverse for purchase is a fantastic program. And that's what I plan to do when I'm old enough and I sell my home. I've turned 62 in 3 years, so I'll be really considering it then, but it'll probably be closer to when I'm 65 that I sell my house and use a reverse mortgage for purchase to purchase a new home. But I think it's such a great program. And just so you know, a lot of people who do reverse mortgages are old enough to get a reverse mortgage themselves, and they get a reverse mortgage because they are in the industry and they understand it and all the benefits that there are to it. A lot of them, they say they don't need it, but they like the benefit of it. And this is not just a needs-based program. We're talking about needs, but remember, you do not have to be desperate to get a reverse mortgage. 98% of my customers are not desperate. I've got a couple that are. Yeah, we have to do a reverse mortgage or we're going to be in real trouble type situations. But those are the oddballs. They're not the ones that typically I deal with. I deal with people who have savings, just not enough to make them feel comfortable. They still have an existing mortgage on their home that they would love to get rid of. And I can help them with that with a reverse mortgage. So keep in mind, whether you're being affected, well, of course you're being affected by inflation. Everybody is. And if you see that, hey, your dollar's not going as far and you could use a few more of them, call me. I'd love to talk to you about how a reverse mortgage might benefit you. Now, maybe you decide not to do it. Maybe you don't qualify right now, but you learn the details about it so that when you do qualify, you're ready to pull the trigger. And maybe you'll decide that this is never going to be an option for you, but you hear so much about it and you want to learn the details. I talk to a lot of people that decide not to do business right now. And like I said, some come back, but a lot of them don't. They got the facts that they needed and they decided this is not for them. There's nothing wrong with that. And I have no problems in talking to people who call me and say, you know what, I don't think this is really what I want to do, but I want to learn the details. Can you help me learn the details? And I'm very willing to do that because I want you to make an informed decision as to whether or not a reverse mortgage makes sense for you, because it doesn't make sense for everybody. Obviously, nothing makes sense for everybody, but a reverse mortgage can help a whole lot more people than think that it's not for them, but it could be for them, and it could really benefit them. So keep that in mind. These are issues, whether it's credit card debt, mortgage debt, inflation, or you just want to improve your overall financial picture. There are situations where we've given scenarios that show, with working with a financial advisor, how a homeowner can actually end up with more assets 5, 10, 20 years down the road with a reverse mortgage than they could without it. All right? Keep all that in mind. It's a great program as long as you understand the details and you make an informed decision. But you can only do that by getting the facts. So call me. My name is Bruce Simmons. My direct line is 303-467-7821. 303-467-7821 is my direct line. Visit me online at reversemortgageradio.net. You can download my consumer guide, and hopefully by the end of the week, you'll be able to go there and get a quote to see if you qualify for a reverse mortgage or not without having to wait for me to call you back. But if you want to talk to me, I'd be happy to talk to you. Thank you so much. I hope you have a great day.
Call Bruce Simmons today. Ask about his free Colorado Consumer Guide, 303-467-7821 or reversemortgageradio.net. Bruce will come to you anywhere across the Front Range to make sure you understand how reverse mortgages work. Regulated by DORA, NMLS number 409914. American Liberty Mortgage is an equal housing lender.